Wall Street could snap its three-day winning streak Friday afternoon, this despite a strong jobs report for October. Joining us now to talk more about that report, as well as joining us with his market outlook, is Brett Ewing. He is Chief Market Strategist at First Franklin Financial Services, and he joins us today via Skype from Tallahassee, Florida. Welcome back, Brett. So, stocks started off on the right foot today. What killed the rally?
Well, I think there's a couple of things. Good news became bad news. I mean, as soon as the jobs report rolled out, I think that that hot inflation on the wage year over year, 3.1%. I think market participants looked at that and said, well, there goes possible pause with the Fed, and the market's not very happy about it.
And do you think those numbers are too hot? Well, what's coming up for December in terms of a rate hike?
I think the rate hike in December is a foregone conclusion. What I'm concerned about is what is going to be the tone going into 2019, Fred. And I think that more than likely the Fed is looking at these numbers and it's confirming, giving them confidence in the direction they've been going. However, we believe that it's that the Fed should actually take a pause and let the market kind of digest what's the effects of these rate hikes over the last 7 or 8.
All right. Well, what we've seen this time around, stocks falling along with bonds, and yields have been rising. Why is that, and are you encouraging your clients to boost their exposure to fixed income at these prices?
That's a great question. So what we are doing with our clients, we're having some big conversations with them about a unique year where bonds and stocks become correlated with volatility, and that does present some ways to that some concerns that people are having. One area that we're recently starting to look at are maybe adding some precious metals into the portfolio, specifically gold and silver. We think that the dollar could possibly pause here, and the attractiveness of those as an asset class, maybe diversify some out of the fixed income into those areas. So,
all right, but you're not then encouraging your clients to add more to fixed income at these levels?
So, well, within the fixed income, there are areas, specifically we're playing some mortgage REITs, MSRs that are actually, they benefit from rising rate environment, and their performance has held up well this year. And I think those are the areas within the credit markets you have to look at.
All right. As for the overall market, the S&P 500 still trading below its 200-day moving average. We really haven't seen the VIX rise to extremely high levels. So what do you think this means in terms of where we are in this correction phase after 3 days of a winning streak?
Yeah, so I think we had a nice short covering rally, and it was additional fuel put on the fire with the recent comments out of the administration, with discussions with President Xi about a possible solution to the trade escalation. And I think you had a major short covering rally there, but it hit the 200-day moving average and failed miserably to pass through that, which, and the VIX is still up there pretty high. So unless we see a VIX fall below around 17, I would say we're still in this correction and probably see a little bit more volatility next week, Fred.
All right. And finally, I can't let you go without your comment on Apple. It's now trading below its valuation of $1 trillion, dropping today about 5 or 6% after issuing that disappointing sales outlook for the holiday season in the earnings report yesterday. Now, Apple shares haven't fallen as much as the other FANG stocks. What would you recommend investors do with Apple right now?
Well, I think if you have Apple in your portfolio, you're up still about 20+% year to date, and you've had a good return. I think the big tech stocks are going through a little turmoil here. Is that beginning of something bigger? I don't know that answer to that yet. But I would say this, there are tremendous opportunities during this sell-off. There's complete carnage out there in small cap stocks and other interest-sensitive areas of the economy. And I think that you've had a good run there. Taking a few chips off the large tech and diversifying your portfolio with this sell-off is a very nice opportunity to diversify yourself.
All right, lastly then, if you take some profit off tech, where do you put it into? You had mentioned earlier some precious metals, I think it was. Are there other equity areas you'd recommend?
Absolutely. Let's look at what the Fed has done, moving interest rates so quick. 7 hikes without a pause. Look at what's going on with the housing market there. And the housing sector, this is a good case of baby with the bathwater. The entire sector has been just decimated here. We're looking at a company, Floor and Decor, ticker symbol FND, and we believe that's a great opportunity. They just came out with their quarterly earnings here this week, and they blew them out the door. The stock rallied 30% off that. Again, it's a great example of all stocks in the sector being thrown out, and you got to look inside of there and pick and choose, and there are some gems, and that's one of them.
All right. Well, thanks a lot for your thoughts, Brett.
Thank you.
Our thanks to Brett Ewing of First Franklin Financial Services, joining us from Tallahassee. I'm Fred Katayama, and this is Reuters.